It
Yeah.
says, one thing I can advise you when using structure, don't be too focused on that. Of course, following structure might continue the trend, but be careful as this is all set up of building liquidity, which, yeah, exactly. 100%. I agree with you 100%. Concentrated. That's what I was telling you the other day. If you'll remember when I'm gonna share my chart, or I am sharing my chart. You can all see it, right?
Hmm.
Yeah. Okay. So I'm
And he
gonna
added one
prop.
more thing. I don't know if you want to read
Okay,
that
let
real
me see.
quick.
Yeah, 9 out of 10 times two with breakup structure, you can see a retrace. Look to the left. It's either liquidity that got swept or filled, and imbalance might respect supply or demand zone too. Again, 100%, I agree. And I haven't you know went over like some of those things like you just mentioned on the Wednesday streams. I maybe have touched on them on some, but I definitely agree with you. Yeah, man, that's perfect. Like 100%. On like, and I'll pull it up on my chart. And this is not going to, I'm not going to mark probably a relevant breakup structure level accurately. I'm just kind of looking for a point to illustrate. Here's one. I'm looking for a point to illustrate my point. Um, Let me cut this off here. Okay. I'll just rewind that there. And then I'm going to say the relevant point was there. I can almost guarantee it, probably on this same time frame as well, 15-minute. So the relevant breakup structure to change into an uptrend on the 15-minute was more than likely right here. It could have been one of these, but I think it was this one or this one. Anyways, besides the point. So like what you're saying, that I agree with is I don't use these levels to like say, all right, well, we're at this point in the move. I'm going to short this. Now, I will for a while, right? But not one to one. I'm not going to just like put this level in my, on my broker exchange and just short it, but I will use this as information to plan my short or long, depending upon uh, other time frames, this time frame, and then also more importantly, depending upon what is over here, right? Because like if we look over here, and this is what like Mulab and I were talking about inducement, just looking at this time frame, we got like that, and then we got that, and I'm just going to mark one more, that. Okay. So we know that these levels here are just ranges on lower time frames. Okay. So I'll just put a little orb around those. May have to adjust that, but I think it'd be okay. So let's put a little orb around that. So we know that these are ranges on lower time frames. Let's see what our inside bar indicator. Yeah, see that's a good one right there. Even though that's not what it hit, but that'd still be a good one. That'd be a safe one. So anything in this move right here would be good to me. Anything around that inside bar would be great. And ultimately it hit close to that. Anyways, beside the point. So if I'm looking at this and it's coming up and it's rejecting, it fails, and then it taps it, and then it rejects again, and then it has this big sweep, I wait personally for these big sweeps. And that's what I was telling Conscious Trader the other day. It was like, wait for these points where it's almost like they're trying to get people to FOMO into a trade. And when these moves happen and it's like, oh man, it moved up like so fast or moved down, whatever, vice versa. And a lot of what someone else teaches that we all know of. Like he's like, oh, if it hits the, break level, it means it's going up. And it's like, does it though? So, obviously if we push play, probably gonna have to speed this up. We can see that when that sweep happens, this is the place that we really want to kind of look for. And if I take this and put it around that sweep right there, and then I'm just going to take my replay tool, I'm going to cut it off there. I'm going to go down to 1 minute. Hopefully I can see something. Yeah. And then bam, there's an inside bar right there. And then let's look at the measurements on the inside bar about what I was talking about in regards to the 0 25, 50, 75 and 1 point there. So I'm just gonna pop it there, and then I'm just gonna bring it over here, but I'm gonna try to line it up with that inside bar. And we can kind of see, and if we had second time frames, we could see it much more clearly, and we could see here it hits that, and then comes up, fails it a little bit, barely breaches it. And these are small percentages, right? I mean, it's a 1 minute, so this is nothing. And that it never succeeds. It never breaks over that 0 point, doesn't even touch it. So it's just another sign of failure, right? So my point is like, and I in agreement with you, is wait for those points where they're trying to kind of bait you in, because even though these relevant breakup structure levels are very important, they are not places that we want to just like place a trade just haphazardly, right? Guys, give me one brief second. All right, sorry about that. My wife just got back from the beach and I was just making sure she was okay. But yeah, we're not going to just like, place a trade here like, all right, cool, yeah, let's make a trade here. But like I always say, they do make good magnifying glasses for us to, kind of look where to place our trade. And we always have to expect, and we've all been there, right? We've all been in that position to where we take a trade, whether it's a short or a long, and then the move develops, it reacts off of our entry, but then has, goes the other direction, but then comes back and it sweeps it, right? Like this big wick, just like, right, like we were looking at right here. If we shorted, let's just say hypothetically that we shorted like this level right here, and it was like, oh, it was great, it worked out, fantastically. And then until here, and it swept all this liquidity, grabbed all these stop losses here, ultimately targeting something up here. And one thing I like to kind of think about is like, if there is a level that can be hit, I'm just going to plan on that thing being hit. Now, if that means if I always plan my trades only on that, and I just always take this, higher level, I'm going to miss a ton of trades. But what I can do, and what I do personally, is let's say that I want to place a $20,000 trade. Well, let's also say that I see two areas that it could hit. It could either hit here and then go down, or it can hit somewhere up here and then go down. I'm not entirely sure, because sometimes things are swept, there's inducement, and then sometimes they're not. And then it just dumps or pumps, right? So what I can do is I can place two $10,000 trades, minimize my loss as best as I can. And, yeah, sure, if only one is hit, I get stopped out on the first one and it hits my second one, yeah, I don't make as much, right? But it's not about like swinging for the fences and hitting a home run every time. It's just not, it's not likely. It's not going to happen. Sometimes it will, but personally, I don't think we should think about things that way. I think we need to think about small wins over time and minimize losses. And that was kind of the point why I posted the trade that I took the other day, where I took one loss that I think was like 15% loss, and that's a leverage 15%, of course. But then I made like, 90, 100, 150, 180, whatever, couple of those on my take profit points. So it was like, it took me 2 times to get into that trade. I'm going to cut this off, and then I just go to the 1 hour reset. So it was, I think it was, what's it? Yeah. Okay. All right. Yeah, it was here. It was like right around here, where I took my short, somewhere in here. But it took me 2 times to get into it. You know what I mean? And that's okay. Like, it's not about being perfect. It's not about like hitting it to the dollar. Those things are freaking great. They're awesome. I love it. I get super excited as well, but it's not something that we should expect every time. It's just, it doesn't happen for anyone. I don't care who you are, how good you are, or how long you've been doing it. But ultimately, like I said, Nuge, I agree with you. And I think the takeaway that I'm trying to express is, if something can be hit that's right above wherever we're planning our entry. So if this was our entry, right? But there's some juicy things up here. And if we think on that time frame, it can go up, hit that, but ultimately come back down or up, vice versa, and not close above that relevant break of structure level, because it doesn't. Like if we look at it right there, let me get rid of this. And let me get rid of this here. And ultimately it comes up. And if this was the relevant break of structure level, it comes back down and closes just below it, right? And then ultimately it does close above it. But that's kind of my point. And I think that's similar to what you're saying. Correct me if I'm wrong, though, please. So you use the 0.5, the 0, the 0.5, the 0.62, the 0.79, the 1 fib for when it aligns with an imbalance on the lower time frame where I want to take entry on Confluence. Doesn't have to align, but it is a plus. Yeah, 100%. I would say that for pretty much everything. I don't know if you agree or any of y'all agree. There's not, and that's what I always say, is there's not one thing that we should base our trade off of, right? But there are things that hold more weight than others. So we have to assign a level of like validity or weight to each of those things, each of the factors, the variables that we're looking for. Market structure, the relevant breakup structure levels, they're going to hold 50% for me personally. And then the way I use my fib tool with the 0, 25, 50, 75, and 1 markings, that's going to hold a significant part. And each of those are kind of relevant to the time frame in which they're in. And then the higher time frames are going to hold more of a weight, and that's the hard part. You know what I mean? It's the hard part of like balancing all this crap, because you have all these variables, all these time frames, infinite. It's infinite. There's not one thing you can say to somebody like, oh, hey, do X or do Y, and you'll be a profitable trader. It doesn't exist. As much as we want it to, it doesn't. And everybody looks for that, and everybody tries to sell that BS, but it doesn't exist, man. I'm telling you, like, if it does and someone finds it, I will legitimately do anything you ask, because I'm very confident that it doesn't. And then Conscious Trader, I'm gonna start calling you I realized this the other day, Conscious Trader, that you're CT and I'm CT as well. That's as much as confluence as possible, but it's not a must to have 10 of 10 confluences. Can it help with a higher win rate? Yes, of course, but to each their own. That's 100% correct in my mind. I don't think there's absolutes in trading, so I can't say like, hey, this is the right way, or none of us can, right? Like we can't say like, hey, this is the right way, this is the only way. I think it's personable, but I think more importantly, like I was telling, all right, I'm gonna call you CT from now on. Like I was telling CT, is it really depends on who we are as a trader, like who we are, what is our mindset, what is our psychological state, the way we see things, and most importantly, what are we looking for as in a trade? Are we looking for a 3-month long position trade? Are we looking to like get in a couple trades in a day and grab a 0.5%, 1%, 2%? We can't look at the chart the same way. It's great to see all that information and understand it, and you want to, but if we try to grab too much information from the charts, this is a big mistake that I made personally, is I wanted all the information every day. Like I wanted it all perfect, right? No matter what, I want down to the minute, all the way up to the yearly, but that's not necessary. You know what I mean? You can glance at higher time frames, the weekly, and the monthly and the yearly, and then if you're trying to just scalp, you just need to kind of have an idea of where those trends are at, where are those percentage points that I mentioned before, and then you can get a pretty good idea of like good places to grab that quarter, half, 1 or 2% trade multiple times a day. So I think that, like the saying I always use, the analysis paralysis, I think it's such a relevant statement to make, trying to explain things to people, and how to lessen the confusion and more or less quicken your decision making. At least of course I always speak from my own perspective and experience, but I mean, like you said, to each their own. 100%.